Alright guys, so big time video here, gonna help you guys a lot out with finding your most probable trades, showing you exactly how I do it and how I use Slingshot with market maker model, and that's ICTs. There's a lot of the discussion in the Discord this week's have been about how a lot of people use Slingshot differently, and there's ways that, for one, someone uses it for, with the algorithm, someone uses it with order flow and the heat map. There's people that use it with standard deviation. I use it with a little bit of standard deviation too, just to help with my trends, but not necessarily just with Slingshot by itself. You can use OTE with Slingshot as well. But today I'm just going to go over how I do it and how I got my winning trade today and how it market maker with Slingshot helps me to be very consistent and have my win rate stay between 60 to 80% consistently. So first, let's go over the market maker and what we're looking for. So this link is in the Discord. It's in the ICT channel, and it's the first link in there. All you got to do, I talk about this website a lot, is go in the search bar, type in any ICT concept, or a lot for you beginner guys. It's got ICT's 2024 mentorship, and I think one other one on here too, and it runs it through and quick little, I don't know what you would call this, blog type of format. So it's really helpful, especially for you guys that, got jobs and stuff like that and can't watch full videos. So here is a picture of the market maker buy model. And, it kind of really, this is what I would trade before creating Slingshot. And, Slingshot is just basically this setup with go back levels. And so here, the whole process with market maker is we have original consolidation up here. We have price coming down, creating engineer liquidity, and tapping into a higher time frame PD array. Then we look for the reversal, break of structure, or market structure shift, inverse fair value gap, and then we're taking profit at these highs, right? So how does this compare with Slingshot? Here's your first reaction. Here's your liquidity sweep, break of structure, market structure shift, whatever one you want. Inverse fair value gap pair with our goal back level, and then taking profit at EQ or 27's high, whatever one. So this is, if we could put this together and kind of imagine it, here, right here, if we look on the 4-hour, and this is how you use it to help you with your buys. This market maker model forms in every single time frame, 1 minute, 5 minute, 3 minute, 15-minute, 45-minute, whatever. It forms in every single time frame. But just like any other model strategy setup, it's not 100%. So you have to pick the right ones, right? So the way I like to use this is I like to look for the market maker model on the higher time frames, whether it be, the 15-minute, 30-minute, 45, all the way up into the 4-hour. But I use the market maker to help me identify where trends are going to go, where price is going to go, and which highs and lows it's going to take out. So here, this is where I use standard deviation. So if we look here, have our last leg up on the 4-hour. Price has now come down and we have swept it. So now we were looking for some kind of reversal. Here is a weekly fair value gap that I was looking at and keeping in mind for us to touch, but we left that behind really quickly. And so here, now we have our market maker model. We have our original consolidation. It's always going to be different. It's not going to look exactly like this. Sometimes the consolidation is going to be very small. But here in this whole area, some consolidation, equal highs, equal lows. We come down, sweep liquidity, and have a break of structure here on the 4-hour. Now, if we look on the daily, and this is how you could have got your buys for the week. On Monday, we inverse this daily fair value gap. So now it's a daily inverse fair value gap. And, we always want to look for precision. And, this is something that you want to see too as well if this is how you're going to be casing it up. if you're going to start mapping out your trades just like me. Our standard deviation, the CE between the 3.5 and 4, is almost paired perfectly with our daily inverse fair value gap. Precision, precision, precision. That's all we want to see. Talk about that with our first reactions. So now that we have this original consolidation up here, we have our breakup structure, inverse fair value gap here on Monday. Tuesday, we would have been looking extremely, extremely bullish. Have our daily inverse fair value gap here. Go back down to our 4 hour. We can see this market maker model forming better. You can see the retracements here, taking off retracements. Coming up, retracement, taking off, retracement, boom. Targeting all of these highs and taking all of these out. And you're not going to see this market maker model until you see that breakup structure. Sometimes you'll be able to identify the original consolidation early, but sometimes you're going to get left behind or whatever, and it's just not going to work out. You're like basically predicting the future if you're going to identify the original consolidation before the rest of the steps happen. So now that we have that breakup structure, then we're picturing in our mind we have this market maker model forming here and taking out these highs. We use our slingshot and gold back. We look at the 729. If we look at the 729, you can see we're having our fair value gaps here on the 4 hour last week pairing up here inside our gold back levels. So the 4 hour moves the exact same as the 1 minute. Don't even look at the top and see that this is the 4 hour. Pretend that this is our 27 and we're in Asia and this is the 1 minute chart. You have a first reaction here, break of structure, inverse fair value gaps. You get entered in, remembering this is the 27. So obviously we're not risking 400 something points, but runs across, right? So if we just completely eliminate the bigger time frames and start looking at these higher time frames, kind of the exact same way as the 1 minute and knowing how they move. And that comes with market experience as well, because with your market experience, you're going to be able to pick up on how price moves, certain patterns, certain things that just pick up with your eyes, and you'll start seeing them on the higher time frames, and it'll allow you to know where the next day or a couple hours or session is going to go. So all throughout here, this is how I was looking for my slingshot setup today. Is we had our reaction off of the daily inverse fair value gap. We had exactly what I wanted. And, with work and certain things, I wasn't able to trade too much. And we had some engineered liquidity right here. We ran up, we came down, and we tapped into these imbalances here. We were also at the same time at 243's lower extension levels having a slingshot setup as well. And so I've talked about this in the lives. I've talked about this in other videos looking for, double confirmation. And here was my double confirmation. I had my 243 pairing up really well and reacting really well for a slingshot setup. Right here's first reaction because we tapped into these fair value gaps that were moving. Come back down, sweep this liquidity in our imbalances even more. And I believe there's unfilled 30. No, it was 45. Right here, we had to fill all these imbalances. We had on the 5 minute, we had a really strong close up. And I knew, and I was a little, not new, but I was a little bit cautious with this trade just because of the move and how heavy it was going down and how much more imbalances we had to fill lower. So I was very cautious here, and I just wanted to see some really just an extra confirmation that we were going to go higher. This leg came down, manipulated for a minute. And then here, once again, putting all the puzzle pieces together, right? So on this whole puzzle piece, on this whole video, since the beginning, we had our 4 hour market maker model. On that 4 hour market maker model, our bias was bullish. We were bullish. That model and the trust that I have in it and the success it's brought me, I know that I could trust it. So I'm bullish for the day. And so then I just wait for my slingshot setup to form. Then we had, going back to our 243, that's where we're at right now. We're having a really strong slingshot setup. We had the first reaction back over here, but then we had another really precise first reaction here. And remember, precision, precision, precision. That's all we're looking for. Going back to when we had the daily inverse fair value gap and the standard deviation CEs paired perfectly. When that's paired perfectly, more so than the times than it's not, it's going to succeed. It's not going to be a failure, or it's not going to be a failed reversal. So here, 243's first reaction, waited for the double confirmation, right? So then I'm waiting for another slingshot setup to happen just because I don't want to get stopped out. Have first reactions here, we're holding off. Sweep into liquidity, fill this inverse fair value gap. We came up, broke structure, and then I got entered in here. And I wanted to get entered in as premium as possible just because I didn't want, to lose any money. I was coming off 2 losses for the week, so I needed to make sure I had a win. And so with my 15 points, it gave me a really good stop right here at this low. And then I took profit at EQ. And I left my stop there because we never really closed anywhere too high, so I didn't bring my stop up. Once this low was created, I brought my stop up to here. And then it came down once that low was created. Let me bring my stop was to here. And then once we came up here, my stop was there. And then there. And then we hit TP. So that's how I followed my stop. So I'm going to run through it one more time just to show you guys exactly what the thought process of was today. So, this standard deviation and daily inverse fair value gap level that I'm talking about, it wasn't, just found out today. This was kept in mind through the last week. This has been on my computer since we broke structure back here. So this is my levels and where I wanted to see us take out. We came down, had a beautiful market maker model form with our original consolidation. Now we're looking to take out these highs here, waiting for price to give me what I want. And I was keeping this in mind last week too as well. Had our daily inverse fair value gap, inverse it on Monday. We're targeting to hit these highs. We're still overall bullish. I'm not going against the trend. $243 is low. $243 is low. Had a nice reaction. Had a perfect slingshot move. Had a good candle closure on the 15-minute, and that's where we want to be. With Goldback, these are the most premium and discount entries that you're going to get, especially with the extension levels. You guys starting out, if you only want to take trades, just entering in on extension levels just to make sure your most premium entry, it's not a bad idea. Or if you're in a losing streak, not a bad idea. And then on our 1 minute, we had our 243 set up again. So overall 3 slingshot setups, the one back there with the first reaction and liquidity sweep on the 15-minute. On the 1 minute, we have a 243 extremely precise reaction, meaning that the rest of the steps that are going to follow are going to be really true. So then we got our break of structure, waited for another double confirmation on our 81 and another slingshot just to make sure we wouldn't get stopped out. Because if you would have got entered in here, you would have got stopped out for sure because you're not risking all that. Because if you do this, you're down like $1,000, and you're not going to, no one wants to be down $1,000 at all at any point in a trade. So then I had a first reaction here. We're holding off. Liquidity sweep, fill our inverse fair value gap. Come up, break of structure. Enter in on the retracement. And then took off to EQ. Followed my stop from here to here to here to here. And then took profit. And then, I put it up here, but then we just ran through. All right, so start using the market maker model. Use this website, understand it, start building your eyes, start studying it. It's going to help with your bias a lot. Trust it. It's the most basic setup there is to the market. It's also the same thing as, our the Slingshot setup. Liquidity sweep, liquidity, like, remember, first reaction, liquidity sweep, break of structure, market structure shift, fair value gap, inverse fair value gap, taking profit at EQ or 27, depending on the session. And I want to remind you that with market maker model, you'll get this perfect setup. You'll get it all. And even with bias on the high time frames, even on your smaller trades, whenever we had the market maker model here, with this kind of consolidation up, this original consolidation up here and taking out these highs, unfilled inverse fair value gap up here, liquidity sweep, break of structure, it's all there. It's the same thing over and over and over. It's just, you got to train your eye to see it on the different time frames. And it's not always going to come all the way up to here. It's not always going to come up to here. It may not even always come up to here. But that's a part of trading. And that's, you lose, have your rules set. Mine are maxed 3 trades a day. If I lose 2 back to back, I'm done. All right? So, have your rules that work with you. Execute this market maker model on the higher time frames to help with your buys. Execute it on the lower time frames to help you with your entry and confidence, and to give you the higher probability setup. And then, yeah, that's it. Just really keep it simple. Don't overcomplicate it. I'm not trying to rush this video, so hopefully this helped you guys out a lot. I'll make some more of these after to see what the questions we got from you guys after this one.